A lot of seniors heard the big, beautiful bill means Social Security is no longer taxed. That's not true. But here's the twist. This law may still wipe out a huge chunk of your taxable income. And many people still don't know how it works. After the One Big Beautiful Bill Act signing, a brand new tax break showed up for older Americans. And if you're 65 or older, this could matter a lot when you file. The new rule gives eligible seniors a $6,000 bonus deduction per person. And it applies from 2025 through 2028. If only one spouse is 65 or older, only that person gets it. This deduction follows the individual, not the couple. So, if you've been wondering what is the Big Beautiful Bill or looking for a simplified Big Beautiful Bill breakdown, this is the part retirees really need to understand. Before we get to the deduction, you need to know one tax term, AGI. That stands for Adjusted Gross Income. Think of AGI like a checkpoint. A lot of tax rules are based on that one number. Your AGI can affect whether your Social Security gets taxed. It can also affect your Medicare premiums. And this is where people get tripped up. Some deductions lower your AGI, others don't. If a deduction happens above the line, it lowers AGI. If it happens below the line, it lowers taxable income, but not AGI. And the big question was this: where does the new Senior Bonus Deduction land? Now we know. The new Senior Bonus Deduction is below the line. That means it can lower your tax bill. But it does not lower your AGI. And that one detail changes everything, because it helps your taxes, but not in the way many headlines suggested. Here's the part most people miss. If you're 65 or older, you may have 3 separate deduction layers, not just one. Layer 1 is the standard deduction. For 2025, that's $15,750 for single filers and $31,500 for married couples filing jointly. This is the basic deduction most people already know. No extra proof needed. No itemized list needed. Layer 2 is the older senior deduction that's been around for years. A lot of retirees get this and don't even realize it. If you're single and 65 or older, that adds $2,000. If you're married filing jointly, it's $1,600 per qualifying spouse. Then comes Layer 3, the new one, the $6,000 Senior Bonus Deduction. And here's the key. It stacks with the other deductions. It does not replace the standard deduction. It adds on top of it. Let's make this real. If you're single and over 65, you could get $15,750 plus $2,000 plus $6,000. That gives you $23,750 in deductions. In simple terms, your first $23,750 of income may fall into a zero tax zone. If both spouses are 65 or older and file jointly, the total can jump to $46,700. That's a massive chunk of income that may never face federal income tax. This is one reason many retirees pay less tax than they did while working. Once the paycheck stops, you usually have more control over what income shows up on the return. So if you've been searching how to pay less tax under Big Beautiful Bill or looking for tax return strategies under the Big Beautiful Bill, this deduction is one of the biggest places to start. Now here's where things get confusing. What if you itemize instead of taking the standard deduction? Itemizing means you use your real deductions, things like mortgage interest, state and local taxes, and charitable giving. You usually do that only if those total more than the standard deduction. So do itemizers lose the new Senior Bonus Deduction? No. You can still get the new $6,000 Senior Bonus Deduction if you itemize. That part stays. But you do lose the older Extra Senior Standard Deduction. That one only works if you take the standard deduction route. Let's say a single filer has $22,000 in itemized deductions. Add the $6,000 bonus, and now they're at $28,000. In that case, itemizing wins. But if the itemized total is lower, the standard deduction path may still be better. That's the real takeaway. Run both numbers before you file. Now for the trap. If you're married and file separately, this gets ugly fast. If you file married filing separately, the new Senior Bonus Deduction disappears, for both of you. Filing jointly? Yes. Filing separately, no bonus. Some couples file separately for specific reasons: tax debt, income-based payment issues, or Medicare planning. But this deduction is one more trade-off you need to count. If you're in that situation, don't guess. Compare both options before filing. What the big beautiful bill actually did to Social Security? This is the part that got wildly misunderstood. Let's clear it up. If you heard the bill ended taxes on Social Security, that's not accurate. Social Security is still taxed under the same basic system. The new deduction lowers taxable income. It does not lower AGI, and that matters. Because Social Security taxation and Medicare premiums depend on AGI or something very close to it, not taxable income. So yes, this deduction can still reduce your federal tax bill a lot. For some retirees, it may even bring that bill down to zero. But no, it does not automatically change how Social Security is taxed. That's the truth about what the big beautiful bill actually did to Social Security. Now let's talk about the catch. This deduction starts shrinking once your income gets too high. If you're single, you get the full deduction up to $75,000 of modified adjusted gross income. If you're married filing jointly, it's the full amount up to $150,000. After that, the deduction phases out, and eventually, it disappears completely. For single filers, it's gone at $175,000. For joint filers, it's gone at $250,000. Here's a simple example. Say a single filer has $100,000 in income. They're $25,000 above the limit. The deduction gets reduced by 6% of that overage. That means a $1,500 reduction. So instead of a $6,000 deduction, they get $4,500. And here's where couples mess this up. Some people think the reduction comes off the couple's full $12,000 just once. That is wrong. The phase-out hits each spouse's deduction separately. So if the couple is $25,000 over the threshold, each $6,000 deduction gets cut by $1,500. That means the couple ends up with $9,000, not $10,500. That mistake could cost real money. This is where planning matters. If you're close to the income limits, small moves can make a big difference. Things like retirement account contributions, qualified charitable distributions, or timing income carefully may help you stay under the threshold. That's where real tax strategy begins. So if you're trying to figure out how to fill your taxes with the new big beautiful bill, or searching how to file new big beautiful bill, the answer is simple. Don't just plug numbers in. Test the strategy too. A lot of people are also searching odd phrases like how to file new big beautiful bill over time. Whatever the wording, the real question is this: are you claiming every deduction you actually qualify for? So here's the clean summary. The Trump big beautiful bill did create a real tax break for seniors. It can stack with other deductions. It can significantly lower taxable income. And for many retirees, that is a very big deal. But it does not erase Social Security taxes by itself. It does not lower AGI, and it does not help if you file married separately. That's why understanding the details matters more than headlines. A small misunderstanding here could cost you thousands. If you're over 65, this is one of the most important tax changes to watch from 2025 through 2028. And if you already filed without claiming it, you may want to look into amending your return. So before you submit anything, check your filing status, compare standard versus itemized deductions, and watch your income thresholds carefully. That's how you avoid leaving money on the table. If this breakdown helped, share it with someone filing taxes right now. And if you want more simple, no-fluff explainers, stick around for the next one.